The street gets relief from sell-off as the benchmark trades in the positive territory. Nifty holds firm above the 24,500 mark while broad indices outperform. Metals lead the rebound with other sectoral indices also holding up. IT and FMCG are the only major drags. The VIX index also cools off sharply.
The US-Israel war with Iran has entered its sixth day, widening beyond the Gulf. A US submarine sank an Iranian warship near Sri Lanka, while NATO defences intercepted a missile headed towards Turkey. Meanwhile, shipping tensions are rising the Gulf waters.
Oil prices extend gains as the US-Iran conflict intensifies, with WTI crude rising over 3% to around $77 a barrel this week. The escalation is fueling supply concerns and risk premiums across energy markets. At the same time, gold has moved back near $5,170 an ounce.
Shares of Coal India have risen about 5% in the last 2 days as global coal prices look set to climb amid the West Asia conflict. Higher oil and LNG prices are expected to trigger gas to coal switching, lifting the international coal demand.
Amki Infra gains after winning a 1,400 crore EPC contract in Maharashtra. Granules India is in focus after Elara Capital initiated coverage with a buy rating. Meanwhile, UPIN is higher after management guided US revenues to cross $1 billion next year.
And Bharat Forge is upbeat after approving an 800 crore unsecured term loan. Great Eastern Shipping Company contracts a Japanese-built dry bulk carrier. Meanwhile, Gujarat Gas declines over 6% after issuing force majeure notices amid LNG shortages tied to the West Asian conflict.
Hello and welcome. You're watching Buy Now, Sell Now, a show where we answer your stock-specific queries. I'm Kavita Thapliyal. With me is my colleague Ankita Saxena. But then let's shift gears to the latest listing on the bourses today. We are talking about Omnitech Engineering, a muted listing with a 10% discount. But then let's deep dive with the management and talk to them. We are joined by Mr. Uday Kumar Parekh, CMD Omnitech Engineering, and Paras Parekh, WT and CFO Omnitech Engineering. Good morning and welcome to the show, gentlemen. And Uday, I'll come to you first. Congratulations for the listing, but the utilization of the IPO proceeds, just wanted to understand, it involves setting up of new facilities. What is the execution timeline, and by when can we expect the incremental benefits flowing into the company's financials now?
So as per our DRHPs, we have given around 4 to 5 quarters of the deployment plan for the IPO proceeds. And based on that, that facility will come to in the FY28 in the sales revenue and the capacity size. But I like to add here, we have enough capacity for our growth trajectory in the FY27. Apart from that, in IPO proceeds, we have some of the IPO proceeds we are already investing in our existing facility, so that will enable us to increase our capacity and increase our customer service and revenues.
Hi, good morning, gentlemen. This is Ankita also joining in. The company's EBITDA margins are in range of 30 to 35%. How sustainable is this in the long term for you?
If you will see the historical for the last 3 to 4 years, is ranging between 30 to 35%. So we are estimating the same in the future to ramp up the same growth level of EBITDA.
I like to add here, we can have some operation leverage, and that's why we are very much confident that it is very much sustainable.
Uday, can you throw some light on your margin profile, specifically the energy and the automation segment?
Yeah. So in general, we are working in the 3 large segments: energy, motion control and automations, and industrial equipment. In all the segments, our margins are pretty nearby what we are achieving since historically 5 to 10 years. So it is average of the segments, but it is always nearby margins, because that margins comes from the precision engineering segments and precision engineering businesses.
Right. So the key drivers behind an order book of 56 odd crores in FY25 to 1,700 crores as of today, what have been the key drivers, and do we see a decline in the motion control and automation share of your order book? Does that indicate any kind of shift in the strategic focus or the product mix that you have?
Yeah, I like to, tackle this. So overall, if you see our order books in the energy segments, we have got some good order into the energy segments. But if you see the overall absolute revenue value for the each segments, it is having a growth trajectory since past 5 to 7 years. So each individual segment is doing excellent. But apart from that, in that we have got one large order from the energy segments, and apart from the energy, we have also order book from the motion control, automations, and industrial equipment. So it is a pretty normal. And one more thing, our industries works on the based on the capacities, because we serve to the large multi-billion-dollar customers. So based on our investment trajectory, we have declared our futures and present capacity that has make us unable to get that big orders.
Also a majority portion of your order book is inclined towards energy segment. Now, in light of the ongoing conflicts in the Middle East, from a potential energy crisis standpoint, do you anticipate any impact on your business?
So overall, there is some geopolitical crises are there. But if you see overall the oil prices and everything, and our major business are from the operation and maintenance side of the business. We are extremely low on the drilling side of the business. So we are very confident we will be smooth in these situations also.
Also, how much of business or demand traction do you anticipate with the Schlumberger going on going forward?
See, we have a large multi-billion-dollar many of the customers. So some of our few customers are one of the name what you have taken, but we have a similar many of the customers in our existing customer profiles. And yes, they are overall doing excellent overall in the industries. The energy segment is doing itself is overall good segments. So we will be seeing some good tractions into across all the customers.
Right. Also, you have clocked in a revenue of 228 crores in H126. Now, what would be the revenue guidance for FY26 overall, and can we expect to close this FY at 400 to 500 plus crores?
So overall, we are in the as per our track records of the monthly revenue and quarterly revenue. We are in the good track records to hit our this financial year goals.
I would like to add in this. If you will see the last 3 to 4 years of sales revenue, so we have growth with the CAGR of 38 to 39%, and we are expecting the same in the next 1 or 2 years.
All right, thank you, gentlemen, for tuning in and joining us and giving us color on the way forward for Omnitech. We'll let you go on that note and talk about how the market is shaping up at this juncture. Well, we are at the highest point of the day as far as the market is concerned. 24,650 is where we have topped at. In fact, we're trading with gains of almost 0.7% on the Nifty. Now, remember, we did see that carnage coming in yesterday. So the dips are getting bought into, and right now we are trading with gains of 182 odd points. Nifty Bank is also seeing gains of 0.5% there, 354 point uptick. 59,100 is where Nifty Bank is at, and the broader end of the market is also seeing some buying coming in. Mid cap is trading up 0.7%, and small cap is trading up 0.6%. So the recovery is, the recovery is much sharper as far as the frontline index is concerned. The broader end of the market is also trying to recover from yesterday, but as of now, they are trading with gains of 0.5% or thereabouts. But let's talk about the sectors then. It is the metal pack that is shining away in trade. It's up and away 3.2%. National Aluminium, Hindalco, NMDC, Tata Steel, all of these are trading with gains of 2.5 plus to 3 odd %. Nifty Energy is also doing very well. In fact, Coal India, remember, is doing well. It's trading up 4%. In fact, Coal India has been, an incremental gainer in this whole carnage that's going on because of the entire the entire price movements on oil and the bets coming on coal. As a result of that, the Coal India has been in focus, and therefore Coal India is trading with gains of 4% today as well. But let's talk about the FNO verse then. In the FNO's 360 that's powered by 5 Paisa, my colleague Sajith is joining us with the roundup of that. Over to you, Sajith.
Thank you, Ankita, for that. Let's look at what's happening in the FNO universe, and starting with the Nifty futures, where the Nifty is up nearly 0.7%, about the 24,600 mark, with the premium at nearly 86 rupees, and we have an open interest which is up nearly 2.66%. In the Nifty Bank, again, the index is up about 59,000, with the index up nearly 0.6%. There's premium of 292, and open interest is up 3.3% as we speak. If you look at this snapshot, a lot of long build-up which is happening in some of the stocks, SGFC and ICICI Bank. There is a reversal which has happened in the last 1 hour of trade. Kotak Bank, IndusInd, PNB, Bandhan, AU Small, all are seeing some long build-up, while some of the other banks are showing some short build-up happening, a couple of them, especially SBI. Look at the open interest change. You're going to see a lot of activity happening at 24,600 because the index is about that, and a lot of support coming in for the index, with the put writers putting in more open interest at the 24,600 level. There is some additions happening at the higher level of 24,700 and others. If you look at the distribution, again 25,000 seems to be a big resistance for the market there, with good support coming at 24,600 and 24,500. Currently the market is hovering about 24,600 as we speak. In the futures gainers, you have Nalco, which is up nearly 7%, Hindalco up 6%, and Mazagon Dock, which is up 4.5%. In among futures losers, you have Swiggy and Eternal, which is down 2% odd, and HCL Tech, which is down 2%. Among the open interest gainers, you're going to see Bharat Forge, where the long build-up is happening and open interest is up. You have Hitachi Energy with a long build-up, and Solar Industry, where there's a short build-up happening, and the open interest is up by nearly 5% there. In open interest losers, you have BDL seeing a short covering. The open interest is down by nearly 3.8%. You have Biocon, which is seeing a short covering, and BL, which is seeing a short covering, with open interest down in these two counters. Among the most active options, you have Reliance 1400. The stock is just below just below 1400 mark. In the futures, you are seeing unwinding open interest happening at for Reliance there, and there's a small bounce which we are seeing in Reliance, and as a result of which there's some unwinding which we are seeing which is long unwinding, which is happening in that. Also, in L&T 3700 March put, there's a support which is coming in for L&T at 3700 mark. The premium is down nearly 34.5, and we have seen contracts going up in open interest by 1.16 lakh contracts in that. So that's an update from FNO 360. Back to you.
All right, thank you so much, Sajid, for all those updates. But then let's move on, and let's begin buy now, sell now viewer queries section, and we are joined by our experts also. But before that, let's just quickly flash our WhatsApp number so that you can tune in and quickly send across your stock specific queries. Just write down the name of the stock, the price at which you bought it, and we'll give you a technical as well as a fundamental view. 865-797 4571 is the number where you can send across your stock specific questions. And joining us to answer all your stock specific queries, we have Kunal Kotra and Avinash Gorakshkar, who will be answering your questions as per your duration, technical or fundamental call. Hi, morning. Welcome to the show, both of you. And let's get a tech check first. Kunal, from you over the market. Strong rebound, but then likely to sustain?
Good morning. Yeah, I think it's a good rebound. Good to see the color green for the markets after such a long time because of the kind of geopolitical news flow the markets have seen across the globe. But I think it's a good rebound across the globe. That's, I think, a supporting factor for our markets. And it looks like that maybe I think many of the global markets are seeing a good more stability. If that happens, then I think we can just build on from the gains which you've seen or the opening levels what we've seen for the indices. The second and the more important part is that the VIX is starting to ebb off. That I think is a very strong signal. So from a 21.5 levels, we are almost at sub 19 mark. for the India VIX. It's a good 10% plus kind of a drop. This also indicates a fact that potentially over the next few days we may see the index going to a further rebound if the VIX continues to ebb off further.
All right, yeah, Kunal, we do see India VIX that has cooled off considerably. In fact, 11% downtick is what we see coming. India VIX is at. But let's start with all the questions that you've been sending us, and let's take the first question for the day. This is coming from Thomas George from Kochi. He says he has 100 shares of Cochin Shipyard that he's bought at a buying price of 1,500 rupees. What should he do now? He's not given the time horizon, but if you can pull up the charts for Cochin Shipyard, he's bought it at 1,500 rupees. Let's take a 1-year view. Or firstly, Kunal, let me come to you first because he's sitting at a loss right now. So what should be his strategy firstly?
See, I think you should definitely hold on to the stock as of now. I understand that over the last 8-9 quarters, approximately say 2 years, the stock has been at the brunt of selling. But then it had to go into a mean reversion because of the stupendous upside the stock had seen from 2021 odd lows when the stock was almost at 250-300 towards the point when the stock went up to northwards of 2,700 plus mark. So after a 10x rally, the stock has gone through a major time-wise consolidation. It looks like that at current levels, the stock is going to a retest of the previous supports of 1250 mark, which was tested in early 2025. So it's a very strong support zone for Cochin Shipyard. I would definitely suggest a hold if you're a long-term investor. Maybe, I think if the stock tests that 1250 mark or thereabouts, it's a very good zone where you can look to average further also.
All right, so that's the answer on Cochin Shipyard. But then let's move on. We're also joined by our live viewer from Delhi, Mr. Naresh. Naresh, hi, good morning. How are you? Naresh, hi, can you hear me? All right, we'll connect back with him again, but then we do have his question. Avinash, I'll come to you because this is a 10 years time frame question. He wants to buy NetWeb Tech for 10 years. Okay, so what's going to be your strategy, Avinash, for this? And also, is this the right pick in the space for that longer time horizon?
Yeah, I think, good morning, Kavita. I think my sense is, I think the investor definitely has a very long-term view, but I would suggest that, in this kind of market, it's better that he deploys his capital, slowly. Maybe he could deploy about 25% of what kind of funds he has. And most importantly, adopt a SIP approach because that will actually help you navigate this market in a much better way. And keep a time frame of at least 2 years first. I think you need to evaluate and monitor your stocks regularly. So for the next 2 years, definitely it's a stock which can make good money, but I think you need to buy in a SIP approach, which will help you, reduce the volatility.
All right, so that's your recommendation. Do we have Naresh now on the phone line? Naresh, hi, can you hear me? Mr. Naresh? Okay, I just hope that he's noted down the suggestions given by Avinash. But then time for a short break, and we have both of our experts live. And just in case you have just tuned in, you can send across your questions on our WhatsApp number that'll be flashing on the screen now, and we'll answer your stock specific questions after this break.
Welcome back. You tuned into Buy Now Sell Now, where we're getting all your questions answered by experts. And now we're joined by live caller R.K. Ahuja joining in from Thane. Hi, Mr. Ahuja. Good morning, and thank you for calling us. Tell us what's your question.
Good morning. I have 3 stocks, ma'am. Shall I start with one by one?
Yeah, sure. Go ahead.
It is a lemon tree which I bought 900 shares at the rate of 144. It is about 30% loss. And hotel and stocks all are going down, of course. Lemon tree is not the exception. So what should I do? Whether I should add or I should hold only?
And what are the other 2 stocks? Give us the names as well.
What is it, madam?
What are the other 2 stocks besides Lemon Tree? Dixon?
Others are Dixon and Syngene.
All right. And your holding time frame is? How much?
Long term, 3, 4, 5, 7 years.
Okay, 3, 4, 5, 7 years. Avinash, let me come to you for this. Lemon Tree, he's sitting at a loss in all these counters. Lemon Tree, Dixon Tech, Syngene, but his holding period is quite long. Would you recommend that?
Yeah, I think as far as Lemon Tree is concerned, I think he can definitely look at averaging because I think now the company has announced a restructuring proposal where the company is going to go asset light. The assets are going to be owned by another group company, and where shareholders are going to be offered new shares in that company. So Lemon Tree should do well. I think for them, the third and the fourth quarter is typically a very good quarter. As far as Syngene is concerned, it's a subsidiary of Biocon. I think it's into the contract research business, a very niche business. So here also, I think if the investor can wait for the next say 12 to 18 months, I think definitely a good upside can be expected. And as far as Dixon is concerned, I think the stock has corrected very sharply. I don't know what's the buying price of Dixon for this investor, but it's come down from almost 18,000 to below 10,000. So here, I think I don't think he should average. He should wait for some time. Definitely long-term prospects are good, but in the short term, there could be a little bit of volatility.
Now, let me come to you as well. What is your take on Lemon Tree, Dixon and Syngene, especially specifically Dixon Tech, because that one has seen considerable drawdown. What would be your opinion?
See, I think you'll have to be ready for maybe a further correction into few of these names, because the chart patterns for these stocks are still into a developing phase, into a downtrend. Dixon, for example, for the last, I think, 5 or 6 months on a trot, the stock has seen a sharp correction and it's fell down from 18,000 levels to now just around the 10,000, 10,200 mark. There is a possibility that the stock should be able to break below that 10,000 levels also in the near to medium term. So the only case in point over here is that my expectation is that many of these stocks can see at least another 10% to maybe a 15% correction before these stocks start to bottom out. So if you have a longer term time horizon, just hold on as of now. Maybe if these stocks go through another round of a 10% odd correction, that could become a good zone where you can look to average out further.
All right, Mr. Ahuja, is there anything else that you want to ask our guest? Is that all?
Thank you very much, madam. Only I got it is applicable to all three, right? Advised by Mr. Kunal. I am his
Yes,
friend.
you've got both.
Advices for all three.
Yes, for all three, sir. All the
Mr.
best. Thank you so
Kunal.
much for asking your question. Thank you so much. Let's move on and quickly let's take a WhatsApp question. Avinash, I'll come to you. This is from Mr. Nikhil Sharma, Mumbai. I think he's a regular viewer and he plays both short term and long term. He's got NMDC at 84.55 to 40 quantity. Predicted target is 92. He's at a loss right now, wants to know what should be the strategy ahead. So let's take a short term and a long term call. Avinash, would you like to go first?
Yeah, I think NMDC is one of the largest iron ore producers in the country, Kavita. And I think, metal prices have been rising considerably, both on the ferrous as well as on the non-ferrous side. Private capex is also increasing. The government has also announced a large capex. So I think current year, that is FY27, should be significantly better. I think if the investor can hold for next 6 to 12 months, I think he should definitely expect a decent risk reward. He should not only cover his cost, but I think he should make a decent gain. So I think it's better to hold in this kind of market rather than exiting at the current level.
All right, so that's the view coming in on NMDC. Let's move on to the next question. This is coming from Nitya. She says she has Tejas Networks. They're a good buy at current price for short term. And what is the target? Planning to invest around 2 lakh rupees. Interesting question. Tejas Network. Current levels, Kunal, is it a good level? Because Tejas Network, if you pull up the charts for Tejas Network, this counter has seen some, crazy moves coming in. In fact, in the last 5 days, like 4 sessions, in fact, yesterday we were doing the data, last 4 sessions, it has moved up 60%. So at this level, should she wait for further correction to get into this counter? And on the charts, do you see more upside to this?
See, I think the stock is still a stock which has been into a major downtrend over the last 2 years or more. From 1400 levels, the stock corrected towards 300 marks. So it's a significant correction, almost like an 80% correction for the stock price from those lifetime highs. So in that context, you're bound to see a point where the stock goes into a very quick kind of a rebound. But my expectation is that maybe the stock should moderate down back again to lower levels. I would believe that maybe there is a chance it can come back to sub 450 mark. So I would believe that not to rush up into buying the stock at current levels.
All right, so that's the take on Tejas Networks. Avinash, any specific comment?
No, I think longer term, I think this business is a very strong runway business for a company like Tejas Network. So I think, if the investor can wait for the next, say, 12 to 18 months, because not only 5G rollouts, but recently they have announced a new product, relating to the data center business. So I think, numbers from this product as well as the 5G rollout would probably take 2-3 quarters to come in. So definitely somebody who is holding on can definitely hold on for the next 12 to 18 months. I think a further correction maybe on the downside can give a better alpha for new investors. So fresh buying currently not advisable, but existing shareholders can hold on.
All right, so existing shareholders can hold on, but currently buying into the counter is not advisable. But let's move on to the next question that's coming in. Then from K Guru, who's writing from Chennai, he says he has 50 shares of Maharashtra Seamless at 630. He's bought it at, and the IRFC at 175. Kindly let me know the future outlook for the 2 years time frame. Avinash, Maharashtra Seamless and IRFC for the next 2 years. What do you see?
I think Maharashtra Seamless is a well-established, pipe producer for the oil and gas sector. They have a very encouraging order book, and I think hopefully, what if oil prices go up, then I think definitely business momentum will be quite solid. They have been maintaining pretty decent margins for the last 3-4 quarters, so I think here the investor needs to take a slightly medium-term call. For IRFC, I think the bigger challenge is that the markets have now just seen a OFS done by the company. The stock has been under pressure, but I think overall, longer term, yes, it's got Indian Railways as its only primary customer, where it finances almost 40% of the capex of the Indian Railways. So this is a compounder for the next, say, 2 to 3 years. Somebody who's investing here should take a long-term kind of time frame here. In the short term, the stock is not going to go anywhere, but yes, long-term prospects are good.
All right, long-term story is intact. Let's move on. Let's take this question from Mr. K. Venugopal Reddy from Hyderabad. Kunal, specifically for you. He wants to know KEC International can be accumulated at the current market price for almost 6 months. He has 43 quantity. 780 is his average cost.
So I think at current levels of 534, you can look to average out KEC. Now I understand that the stock is still into a downtrend. There could be a possibility that the stock may drag a little further because it's going through a low volume phase of correction. But the only positive part on the charts, what I can see, is that the stock is almost at a 20% divergence below its 200-day moving average. So for example, the 200 DMA is at 785 for KEC. The stock price is at 530, 535 thereabouts. So it's almost a gap of 250 points for the stock price from its long-term moving average. That looks to be a little bit more steep. And if there is a phase of mean reversion, the stock should come back to 650, 700 levels thereabouts. So it's a good zone where you can look to start, maybe adding few quantity if you've bought at higher levels, so that you can play in for a bounce till at least 600, 650 plus mark for the stock.
All right, with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we'll come back and get all your questions answered. So keep writing in. We'll be right back.
Welcome back. You're watching Buy Now, Sell Now. We're answering your stock-specific questions. We are joined by Avinash Kodakshkar, Kunal Bothra as experts for the day today. And we are also joined by our live viewer from Chennai, Mr. John. Hi, good morning. How are you doing, sir, today?
Yeah, fine. Thank you. Thank you.
Thank you so much for sending us your question. Our experts can hear you. Please ask away.
Pardon?
You can ask your question, sir.
Okay. See, I'm interested in entering 5 lakhs at the current level. Now, I think today it has risen by 1 or 2 rupees, I believe. So it's the correct level of entry. I'm a long-term investor.
All right, you're a long-term. Any specific reason why you chose this particular counter for long-term investment?
It's a FinServe company, and in my portfolio, I don't have any company servicing the financial sector.
Okay.
And it's also it's in the digital payment sector.
That's interesting. You're looking at, you're taking care of diversification in your direct equity portfolio as well. That's very good. That means you're an investor. Avinash, what's your recommendation?
Yeah, I think Kavita, this is a recent listing, and Pine Lab operates in the POS category. I think this category has been growing very rapidly, considering the digital kind of onslaught, which is now seen almost across various product categories. So I think if the investor can wait for the next couple of years, I think this could be a reasonably good bet. The company has a very strong promoter team. It's been funded by a lot of PE as well as VC funds, and my sense is that over the next 2 years, the opportunity for this company to grow is quite significant. So if one takes a 2 year call, I think one can definitely look at buying this stock, but take a time frame of 2 years. And, obviously you'll have to wait for this stock to outperform based on the numbers they throw up for the next couple of years.
So quarter numbers, that should be on your radar, Mr. John. And yes, 24 months time duration that you will have to give to the counter. Any other question that you want to ask?
No, that's all. That's all. Because I make it a point to ask only one query a day.
Yeah, we keep looking at your queries almost every day. So thank you so much for sending us your question, and thank you so much for being a regular viewer.
Okay. Thank you so much, Kavita, and the other guests.
Thank you. Okay, let's move on and quickly let's take the other question. This is from WhatsApp from Mr. Venkat Ramani from Bangalore, and he's holding Hindustan Zinc 150 quantity at 570 per share, and he wants to hold for 12 months. I'll come to you, Avinash, and along with that, if you could just give your commentary on the entire metal pack as well, Avinash.
I think Hindustan Zinc can be held on. See, I think the stock has appreciated significantly considering the rise in silver prices. My sense is that silver will continue to grow, considering that there's a lot of industrial demand as well as social demand associated with it. And Hindustan Zinc is the only private sector producer which makes, silver in the country. So I think clearly with silver prices the way they are, I think quarter 4 is going to be much better, despite the fact that, a certain percentage of the volume production is hedged by the company at fixed prices. So looking at the next 12 to 15 months, one can definitely stay invested. Good results and good numbers obviously would re-rate the stock going forward.
All right, well, with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back and answer your questions. Don't go anywhere. We'll be right back. The number is flashing on top of your screen, so keep writing in. Welcome back. You're tuned into Buy Now, Sell Now, where we're getting all your stock-specific questions answered. And let's get another question that's coming on WhatsApp. This is Rakesh Gupta, who's writing from New Delhi. He says he has 5 shares of Bosch. He's bought at a buying price of 33,408. What is the prospect for the stock? Should he hold it or should he sell? Kunal, coming to you. Bosch, 33,400 was his buying price. At this juncture, clearly, he's sitting at a loss, albeit very marginally. But what should be his strategy? What do you see on the charts for Bosch?
I would suggest to keep a stop loss of 33,000 on closing basis for the stock price, because the next support for the stock would be around 32,500 mark for Bosch in the very short term. And my assumption is that it's a very short term oriented trade which you've taken. So I would suggest keep 33,000 as a closing base stop loss for the trade. In case if that doesn't trigger, then there could be a scope where the stock may come back towards a retest of the most immediate resistance, which apparently is at 34,850 levels for Bosch. But for that, I think the stock has to take support at this 33,000 mark on closing basis.
All right, that's the take on Bosch. But then let's take Shrikant's question from Hyderabad. He's holding Ireda 450 shares at 32. He wants to know if he can exit the stock. And Birla Soft also is his question on 200 shares at 452. He's a long-term investor. Avinash?
I think as far as Birla Soft and Irida is concerned, see, both these companies are going to face short-term headwinds. As far as Birla Soft is concerned, the IT market is currently facing the AI issue. Most importantly, order wins from international markets like US would take a little bit of time. And as far as Irida is concerned, I think the Q3 numbers were a little disappointing. So I think unless the investor has got a 12 to 18 month view, in the short term, Irida may not make that kind of money. My suggestion is, in the domestic PSU banks, there are good opportunities available like Canara Bank or for that reason, a Bank of Maharashtra. He could possibly switch over IRDA in this either of these stocks where the risk reward, I believe, could be better in the next, say, 6 to 12 months.
All right, so let's move on to the next question. This is coming from Renuka Thomas, who's writing from Trivandrum. She says she is sitting at a profit of 30% on BEL. Should she sell now and buy L&T or HAL? It's an interesting question, Avinash. Let me ask you this. She's already sitting at a profit of 30% for BEL, which has moved up considerably, and she wants to sell that. And should she get into L&T or HAL? L&T that already has seen a significant drawdown, and in the future also, given its exposure to Middle East, how do you see that panning out? And also, HAL is a defense play. So, because of what's going on, defense play is, of course, something that people are incrementally positive on. Should she really sell BEL and get into one of these?
No, I think she should hold on to BL because typically, I think you should hold on to your winners. And I think BL definitely looks very solid. They have a very strong order book, a virtually debt-free business. And now new JVs have been signed. I think Safran, which is a French company, is going to tie up for some new defense equipment. And plus, my sense is that the company currently has a 2-year order book already to finish. So I think rather than selling a winner, it's better to hold on. You could expect a decent upside in the next 12 to 15 months from BL itself.
All right, that's the recommendation on BL. But then with that, it's time up on the show as well. Thank you so much, Avinash and Kunal, for being our experts today and guiding our viewers. Thank you. And that's it on today's edition of Buy Now, Sell Now. But you stay tuned. A short break, and post that we'll get you markets at noon. Stay tuned.